All right. I would say even though I tried to get a lot of videos in last week, it was just more of the same. And I think the first two videos that I did kind of explained it. Now we're kind of going through a phase to where we're going to be doing a little bit of a pullback, and then we're see. I think we're gonna see what's gonna happen after that. But I think I got a good idea, and I'm gonna go through all of that with you in these charts coming up. So stay tuned, my fellas. And, and ladies. All right, so down to the nitty gritty of things. I have been checking out. Actually, this is my first Saturday off in for a long time, so of course I'm going to be glued to the charts. Um, and they're not like all over the place. They're kind of still following the same rhythm, I guess you could say, as most of it was last week. It's just that last week they were all doing the same thing where they were forming equal highs, and then after they would form equal highs, they would break those equal highs, and then you would see this big formation up top. And now it's at the point to where it's starting to come back down, which is the retracement aspect of that wave. And so we'll get into that with quite a few different charts. Excuse me. But first, what I'd like you to do, if you have ever seen my videos, you know all about smart money. Smart money, what you got to do is you got to take everything that you've ever learned about retail trading, about trend lines, about trading double tops, double bottoms, channels, trend lines, all that stuff. Throw that out the window. All right, that's what you got to do. You really got to clear your head, because what smart money is about, it's about the people that have the deepest pockets, who control every single bit of the charts. And what do we do as smart money people? We think like them, right? We think, hey, we know how they're taught, so we're going to go against everything that they're taught. And that's what smart money is. So, that being said, let's go ahead and, first thing, what you should do, hit that subscribe button, hit that like button, because you know you're going to want to come back for more. If you haven't seen my videos, if you have seen my videos, believe me, I try to do my best to relate to you guys, especially newcomers who haven't really been into this side of the world. I remember when I first started, and it was so hard. Like I was losing money left and right. And the reason I was losing money left and right was because I was following all the rules that I was being taught. And then I got a mentor. His name was Inner Circle Trader, and he spelled it out for all of us. And I didn't believe him at first. I thought he was full of crap. I thought he was like, no, this thing can't be an algorithm. No, price cannot be just fixated by a computer program. But man, I'm sorry to say it, but that guy is right. He did every single bit of his stuff that he has taught me is right, and I want to pass. But the thing is that whenever he teaches it to us, he teaches it in forex. He doesn't teach it in crypto. Sorry. So that is what I want to do. I'm taking all of his concepts and I am translating them to crypto because he doesn't really know how to do it. I'm a crypto freak. I'm sitting here studying this stuff nonstop. And so we're going to get into this. So, all right. First chart we got up here. Well, actually, this is the NASDAQ. This is going to be the last one we're going to do. So first one we're going to do is actually the main one, the big one, Bitcoin, right? And so what I have here is I have Bitcoin on a daily chart, right? And I don't know if you guys remember me talking about, I think it was earlier. It was earlier last week, right? Probably around this area, right? When we talked about it coming up to a high, pulling back, and then boom, breaking up above that high. That was February 4th. When was that? That was definitely last Friday, something like that. So pulls back, right, and leaves what's called a fair value gap in between these two candles, right? That's what a fair value gap is, right? Anytime there is space in between, a green candle here, a red candle here, a green candle here, there's a space in between them, that's a fair value gap. That means there's an imbalance in the charts. What price likes to do is it likes to attack liquidity and go for the imbalances. Now, what did this do? It left an imbalance there. What did it do right after that? Boom, it attacked liquidity. Now, what do I mean by attack liquidity? I mean that right above this high, right, there is going to be sell limits, right? Because people are going to think of this as a Jesus, I can't think of the word. A resistance point. That's what they think it is. They think it's a resistance point, right? So people that think it's a resistance point, they think of two things. They're either going to, go short on it and try to catch it the other way, or they're going to do a buy stop on it, thinking they're going to catch a breakout, right? So what smart money does is they will go through the high and then pull back and then go again to take both of those people out. So they'll go through it. And actually, here, let me take this fib off. That this might help out. All right, so I take this, move this over. So it pulls back, right? And I actually am on the daily, so maybe if I get into the 1 hour, 4 hour, it might help out even a little bit more. All right. I'm going to move this over here. Oops, I didn't mean to do that. All right, here we go. Move over, come on. I don't have time for you all day. I'm actually doing this live for once. And this thing is just not wanting to cooperate. There we go. All right. There it is. All right. So in the daily, this was one big, just imbalance, basically. That's what we like to call it, an imbalance. All right. So it comes up. It does break these highs. You see what I'm saying? So what you have is you have a low. Where'd that low go? Put it over here. You have a low, you have a high, and then you have a lower low. All right? What that's called a breaker, right? What that means is that within the algorithm, that is technically a drawback point, right? So what that means is that the people with the deep pockets, what they like to do is they will, of course, push the charts up. Once it gets to the high, what do? Boom. Well, they don't really boom, but it'll consolidate for a second and then boom, they'll push it down, right? And because they have the money to do that, they have the money to push the charts around, and that's what you have to do. You have to think like they do. All right. So now that it's pushed down, everybody's chasing it, thinking it's going the opposite direction. So what do? They take all their money and they go buy. And boom, it goes up against anybody who was chasing it south, taking them out from their short stop losses. They may have got a little bit of something in there, but if they were prepared for this, if they would have seen this formation coming, the low, high, lower low, they would have known to, hey, watch out for this. This high right here, this is where the liquidity is. And what does it do? Boom, goes right through it, pulls back just a little bit, just to try to get enough people to try to bite on that, right? And try to go short with it. And as soon as it pulls back just enough, boom, they go back the other way. Take everybody out that was trying to go short with them again. So that is their mentality process. Their mentality process is to take everybody out that who was taught retail trading, who was taught to, go short on these equal highs or, buy on the equal lows. More than likely, the thing is about 30% of the time it's going to happen. The other 70% of the time it doesn't. It gives you enough winning power to want to keep playing more, but it doesn't give you enough winning power to actually win. So if anybody is ever actually been like me and spent my first 2 years in the hole, just absolutely flushing money down the toilet because I was following a retail logic. I was doing everything the books told me to do. I was doing everything, the instructors were telling me to do, until I realized they're full of crap. The books are written by, JP Morgan Chase, and JP Morgan Chase is the number one people that are out here doing all of this trading. So, all right. So anyways, we have a consolidation here. All right. A consolidation pulls up a little bit higher, a little bit more consolidation. And then this is where I think it's going to be heading. All right. So we have, if we were going to go back to the daily, what I'm going to do, you actually have a fair value gap, or an imbalance, as I like to call them. Technically, they're called fair value gaps, but I try to drill into people's head that it's an imbalance. And the reason that I try to drill that in their head is because price does two things, right? It looks to attack liquidity, which is what this was here, this big green candle. That was an attack on liquidity, right? Because it had this high. So it attacked that liquidity. We saw it stop short, pull back, and then go back up. That was a huge attack on liquidity. All right, because anybody that was going short took them out. Anybody that was going, was going long, it took them out. And so, all right, now we look over here, and we're looking at these candles right here. Look, they get above these short-term highs, right? So that's a break in structure. A break in structure is a good thing, all right? That means that's a bullish tone, all right? So we have a break in structure, even on the daily, right? But the thing is that it's going to be falling back into this retracement process, right? It's not going to turn into a full-blown, reversal. At least I don't believe so. I don't see a reason why. But the reason I do think it's going to fall back into this area right here, especially where I have it laid out. Let me put the fib back on here. All right, so I put the fib back on, and look, right where this fair value gap starts at the top is the 50%. Right at the fair value gap at the bottom is the 88.6%. This is the smart money. All right, this is the smart money Fibonacci way you should actually process them, I guess you could say, or the numbers that you should have for your Fibonacci, for smart money. 50%, always have a 50%. You can always measure things in half. 61.8%, we all know that one's a good one. Some people put it at 62. 70.5, always a good one. 70.9, most of your reactions actually come at 80%. So that's why we put 79. Give us a little bit, 1% area just getting in there in case we want to layer it. And what do I mean by layer it? I mean by putting in entrances. Let's say you're scared that you don't want to put your entrance all the way this low, but you do want to enter this trade. What I call layering is, all right, put it all the way up here at the 62, right? Put it all the way up there, 62. At every smart money level, 61, the 70.5, right? The 79, and then, of course, your last one would be the 80.6. You can layer them to where you can enter them, maybe 10% on the very first one, 20% on the second one, 30% on the third one, and then maybe whatever's left over on the last one. If it gets there, I don't know. Either way, you should be thinking about how to strategize those type of things. That way, in case you ever encounter them, you're not going into a trade with only 10% of what you could have had, right? So I like to layer things. I personally do. That's just my kind of thing. All right. And then so after it comes back down in here, enters this fair value gap from this area here, which starts from February 1st, goes to February 3rd. There's an opening right here. I think it's going to pull back into this area, right? because there is that imbalance that it wants to fill. All right, that's what price does. It wants to hit that imbalance. And then after that, then we'll finally start seeing bullishness from that point forward. Now, will it get as far as where I'm putting it? I don't know. I do know we'll at least get to the bearish order block, and that's why I stopped it right there. You can at least take profit right there, reset. Who knows, it may pull back a little bit further and then continue on. The thing is that this high area here, I should say, or this high, was blocked, I should say. It was not really blocked, but here, I'm trying to draw it. It was a bearish order block. All right. So what a bearish order block is your last up candle before your down candles close below it. Right. And you can see those on the other way too. So this right here, this red candle was actually a bullish order block. So whenever this candle skyrocketed above it, closed above it, this is actually a bullish order block. So you can move here. Let me see if it did even do anything. All right. You can move that over here. And you can say, okay, here's the bullish order block right here. And that's why I say my microphone came unplugged and I was freaking out. Okay, so this top of the red candle is actually a bullish order block. So it could come down inside the bullish order block. It shouldn't get more than halfway through, which about halfway through is the fair value gap. Boom. And that's when it starts going back the other way. And then we look at the bearish order block. It may hit that, bounce back, probably hit the top of the fair value gap on the daily, and then continue on. That's personally what I see happening. All right. Stop it. Okay. And I just want to draw one more path on here just to give you like kind of an idea. It would probably hit that, come back maybe inside this fair value gap before moving up on into this area here. Now, as you can see, here is another bearish order block. But the thing is that we have already come up and touched that bearish order block. So that tells me that this could probably get a little bit higher, right? Maybe about halfway into this bearish order block, not just touching the bottom. Usually about halfway into it. Once we get about halfway into it, that's when we start seeing a little bit of a retreat. Maybe even further down, because it could touch I'll show you in just a second. Because whenever it does retreat, it could come back down here and touch this. And this is what is called a, this would be a breaker. And the reason this would be a breaker is because you have the red candle here. So you would have a low, a high, and then a lower low. More than likely, more than likely. So whenever it becomes a low, high, lower low, then you do have what is called a breaker up at the top of here. If this is too much for you, I understand. It's a lot to go over, but then it would pull back into that breaker area and just to the top of it and then move on forward. That's why I have a lot of good feelings about Bitcoin actually pulling out strong right now. A lot of people are like, oh, it's just going slow and it's just doing nothing. And I'm telling you, just look at the formations, look at everything else that's happening. It's not getting below, these levels down here or anything like that. It's actually looking like, and plus, again, it broke structure up here, hit a bearish order block. It's going to go down, come back up, and then move on. And then we should have a jolly old time. We should have a great old time. All right. And now I'm going to move on to Ethereum. I actually saw somebody post something about Ethereum. And so I looked at it and I was like, man, I should really probably try to give this guy some help. Mainly because, and I'm not trying to put the guy down, but I've never seen anybody put a 3-day period on their chart. Smart money doesn't think like that. Smart money doesn't think, oh, let's put 3 days to a candle. No, they don't do that. They put 1 day to a candle. They put 1 week to a candle. They'll put 1 month to a candle. And that's pretty much about it. Maybe they'll get down to about 4 hours. It depends, but that's about it. So I entertained his 3-day idea. And here it is. If it'll come up. But I still left everything that I had calculated in there. You still have weekly imbalances. You have weekly fair value gaps. And what he was saying is that because of this candle, this 3-day candle that he had going, was going down, that he thought that it was going to reach down to this line right here where this 100% is, the 1731. He thought that was going to be the resistance point. I'm sorry, it is not gonna get that low. If you ever, I've done multiple time frame analysis on these Ethereum charts. These are at the very bottom of like weekly fair value gaps, monthly fair value gaps, and then they finally take off. And that's why this one is current low is at the height of these 3 red candles going down. Why? Because that is your bullish order block. Your bullish order block is what is your down candles, right? And then your up candles, your bullish candles, overtake them and then close above them. That's what creates a bullish order block. Now, whenever something like that happens, you kind of have to sit on your hands, because then you got to wait for it to come back to that area. Because once it comes back to that area, you know it's going to be going above and beyond. Unless there is something odd that really has to happen and it causes a reversal and it shoots back really quick, it doesn't get above these highs right here, then that's when you would have to start thinking about, okay, this thing is actually probably going to reverse on me. But instead, what I see in this is I see that we are still bullish above the golden dotted lines. As long as we're above the golden dotted lines, we are still bullish. Okay. And I'm still in this 3-day thing. I'm going to have to go to the 4-hour because that just annoys me. And then we can take a look at the more up close, or the more recent apparatus of this chart. And we can kind of break it down to see what's going on from here, if it would ever come up. Anyways, I hope you guys are having a good weekend. Thank you all for joining me. I know there are some people joining me. If you have any questions, if you have any charts you want me to go over, shoot me some something. Be like, hey, dude, can you check out this chart? I'll be glad to check it out for you. Right now I'm just kind of going over the main ones. Ethereum. I'll be going over AXS, Matic, Phantom, and then I'll be going over NASDAQ. I'm going to try to get this done fairly early so I'm not wasting too many people's time. But if there's people that want to hang around and want me to do more charts, I'll be more than happy to. Not a problem. Okay, so now I'm in the 4-hour of it. All right, so now that we're in the 4-hour of it, we can see it came down, hit the bottom of the bullish order block, moves on up, kind of comes back down. Now we're getting into, I guess you could say, some fair value gap territory. There is actually fair value gap territory, and let me elaborate there. That wasn't supposed to happen. There we go. Come on. How many times you got to click on this rectangle to get it to go? Okay, here we go. Boom. All right. There we go. That right there is a 4-hour fair value gap. I'm going to change some colors on it so we don't get it confused with the other one. So I'm going to go with some gold. Pimp out my ride, some gold trim, some yellow doors. All right, so this is definitely a 4-hour fair value gap. And what does that mean? That means that price wants to come in and fill that gap. All right, so FVG for HR. All right, so now we're basically designating that as a 4-hour fair value gap. As you can see, it does come down, comes down into it. It doesn't have to fill the whole thing, and that's the thing. More than likely, it'll come down to at least halfway through before it gets pushed back out. As you can see here, this fair value gap, it definitely did fill, comes down, fills by halfway through, pushes it back up, comes back down, and then shoots off. And why this chart decided to just move and not do anything on me, I have no idea. Please don't get mad at me for doing this, okay, guys? Please, I promise. Come on. I'm gonna have to edit this after this is over. This is horrible. I don't think I have anything up. Oh, no. Don't do that. Okay. Jeez. All right. Sorry, guys. I'm just going to have to restart for this one from the beginning. Yes, reload. Jeez. No, I just clicked that button for my health. Saying, oh my god. Anyways, I think we got a pretty good idea about what was going to happen to Ethereum. Here, let me close out Bitcoin really quick. Okay. Oh, I closed it out of Ethereum instead of Bitcoin. All right. Well, I think we had a pretty good idea what was happening with Ethereum. It was pretty much similar to Bitcoin. All right. Here we have Axis Infinity. And this one is an interesting one. Here we had some equal, I guess you could say equal. I mean, but it went straight to Clark. It went straight across. It had equal imbalances on either side. Now, even though it did have equal imbalances on either side, what did happen is that just below those equal imbalances is that we had liquidity highs. I would call them liquidity highs, but equal highs that would basically turn into the form of liquidity, right? So what that means is that where you have these high areas, is where you have things in the form of, I should say, your traders, your retail traders, would be putting sell limits, close to these equal highs, thinking that it would be going short because there's so many, right there in a row. It just looks like a resistance point. Everybody would think would be going short, or you would have the other people on the opposite end thinking that you're going to catch a breakout, and they would be putting theirs in buy stops. Smart money people, what do? We wait. That's what we do. And why do we wait? We wait because we know it's eventually going to break these highs and then gonna pull back and then gonna push itself forward again. That's what's gonna happen. So I'm trying to, well, I thought I was going to the 4 hour. Here we go. Yep, here it is exactly. So you have 1, 2, 3, 4, almost 4 equal high areas, and then here it comes up, equal, pulls back, boom, goes above it. All right. So anybody going short, it whoever chased them, boom, it took them out going the opposite way. Or anybody that was waiting to catch the explosiveness or trying to catch, going the opposite direction. Instead, what it did is it pushed up and then fell backwards. And then those people were like, oh crap, I went the wrong way. And they started following it backwards. So then what did they do? Pushed it on up. So then those people that originally had the right idea started falling backwards and then pushed up. Right? And then so after that, it took all those people out. And then now it's kind of meandering its way, making a slow adjustment. Probably going to, it looks like it's probably going to end up doing nothing. That would be my consensus. It looks like if we were to draw a fib here to here, it comes down. It has almost hit, well, actually, if I was to try to pull this up just a little bit over, it probably does hit the 61%. So, it looks like it's hit the low point for the evening, and it's probably going to be going on it from here. Are there any high points, equal highs? No. But what it did do is it did hit boom. All right, so there is your bearish order block. So it did come up, hit the bearish order block, so pushed it back down. And as it pushed it back down, what do you have right here in this red candle? That would be your bullish order block. So, bullish order block in the form, well, as you can see, I've already kind of started it here. I guess I didn't extend it here. So, bullish order block starts right there. Comes back down all the way back down to the 61.8%, and then now you can see it start to rise. And here you can also see where you do have equal highs. Boom. So since you do have equal highs, I wouldn't put it past this chart to actually try to break above this and take out the liquidity that's above here. All right, Matic. This is one I've been loving to watch all day. It's because it's been up and down and all around, and it's just been. I don't know why I have it on a 3-dayer, to be honest. But I've been making some good money off Matic today. I know I told people I drew this out ahead of time, and I even have an insight on Tradingview about this, to where I thought it was going to fall back and then run up, and then possibly get to these highs. I was thinking a little bit shallower, and then I don't know. I was thinking more along the lines of something like this. Let me get jeez, where's it at? Not a brush, Jesus. Path. Okay, so first thing, pull back. Now I was thinking it was going to come up to where this either yellow line is or to where this yellow line is. And then probably pull back a little bit further, and then that's when it would take off. Instead, it took off out of the park right off of here. And the reason I know why now is because, all right, you see this big wick right here? When you have a big old wick, right, and it's larger, taller than the candle before it, that is what we like to call a redeliver rebalance, right? Let me type that out for you. Redeliver. If I could even type. Redeliver. Jesus. All right. Rebalance. Now, what exactly does that mean? Well, what redelivery balance means is that, all right, so, how we talked about how in between these candles, they leave a gap, right? And that's what we call a fair value gap. Well, redeliver rebalance is almost the opposite. It leaves too much of a gap to the point to where that this is almost obsolete. This would basically not be counted. So since it wouldn't be counted, that you're basically taking this whole wick right here and you're just kind of throwing it away, right? And since you're just kind of throwing it away, let me take a trend line here, and I will go from the bottom of here, stretch it all the way. It did not take. No, come on. There we go. So that would be your redeliver rebalance. So whenever you see something like this, or 2 or 3 feet above it, who knows, you know that is basically what we would call liquidity run, meaning that anybody who is following it short, shorting, the whole chart, smart money knows they're going to go press up against it. They're going to take them out and buy with their short stop loss or whatever they can do to make sure that person is not following them anymore and trying to take any more of their money. They're going to try to take more of your money, right? So instead, if that ever happens, ignore it. Think of it as not even a piece there. And then you would just measure from here all the way over. And then now you have that right there is balanced. Yeah, that is a balanced 4-course meal, or actually just balanced candles. And then, so, like I said, at first, I thought this was going to pull back, then go up, pull back, and then go even more. But I was wrong, only because I missed the redelivery balance, and then stays up here, pulls back, and look where it comes right where I thought it was going to go. So it comes back down, hits that exact same spot. Now, why did I think it was going to hit that spot? Is because of this guy right here. Right. So here you have we call it a breaker. We kind of have two breakers here, but the lower one is going to be the more lucrative one. And the reason it's going to be the more lucrative one is because this, once ever this takes off and then comes back, the other, well, actually let me see. Yeah, no, that's not even a breaker. So a breaker forms a low, high, lower, low formation, right? And if it would actually cooperate with me, I could probably show you. And it is not cooperating. Sorry, y'all. All right, so here, low. Jesus, come on now. What in the world is happening? Can I not click on anything and it work for me, please? All right. Low. Jesus. There we go. Oh no, don't tell me I did that crap again. Low, high. I'm going to refresh it. It's all right. We only got two more. Unless anybody has a desire for another chart, which I might actually. Oh, you know what? Screw it. I'm going to Matic, and I'll come back to AXS. Well, hold on. I was on Matic, wasn't I? I need to get rid of AXS. All right, Phantom. I haven't really looked at Phantom too much today. Reload. Hello. But I do know that it has been lucrative. Look at this. You can already see double highs, or somewhat double highs. Close enough. Close enough that it will be considered double highs. And what are double highs? Liquidity. Why are they liquidity? Because they are coming in the form of sell limits and buy stops. And whenever people, put a sell limit or a buy stop out there, as soon as the price reaches that target, it releases liquidity into the chart. So equal highs is liquidity. Okay. Now, what I'm looking at is to see how far this would go. Interesting. Okay, so you do have a full fair value gap right here on the daily. So we'll go FVG daily. So now that Phantom is coming down, it looks like the Williams percentage R is at the bottom. It looks like the ATR, the average true range, is at the bottom. So it looks like it's kind of priming itself to actually move higher. I wouldn't doubt that. If anything, it could try to force itself to the bottom of the daily fair value gap, and then move up. But I don't see it getting much lower than that. I think the lowest it could get, I'm not saying it's going to, I'm saying it could, is you see this red right there. So you have this low, high. Actually, that's more of a mitigation. That's not really anything that has to do with breakers. Is about the word I was looking for. All right. Now that I'm looking at this, here is another. Why did not want to stay? Okay. Fair value gap daily. Fair value gap hard daily. I guess that's what the H stands for. All right. So, and then you also have a bearish order block. See, that's the thing. I don't know where to put this bearish order block. Usually, it's the last up candle before the down candle comes down and closes below it. But this is very wicky. You don't like to put bearish order blocks on very wicky candles that have no body. So I'm going to leave it right here. I think that'll be fine. I think that'll work perfectly. And then if I'm looking at Phantom right now, like I said, I think the best that it could do would probably get to the bottom of here, maybe hit this dotted line, come back up, and I think we're going to see more of this. All right, last one, guys. Last one. I know you're happy. I'm gonna go with the Nasdaq futures, even though we're still a day away. off from NASDAQ. We should still be preparing for what could possibly happening, because NASDAQ and crypto do go hand in hand. They really do. A lot of things in NASDAQ are in crypto. I should say a lot of things in crypto are in NASDAQ. I'm on the daily. I'm going to switch it to the 4-hour really quick. See what we got going here. I have a line. This is liquidity point. Okay, so that's a high here. Okay. Nothing bad so far. Not seeing anything out of the ordinary. It looks like all of the... Well, there's a little bit up here, but I think we can get away without it. Looks like everything is balanced. Yeah. Definitely everything is balanced. Williams percentage are at the low level. And I'm not for sure how NASDAQ is going to start off, to be honest. We're going to have to wait and see how tomorrow is going to play out. If we get some good runs tomorrow, yeah, I think NASDAQ is more than likely going to be able to handle it. It may pull back a little bit. Okay, the one thing I do see if we are drawing a fib from low to high of the current wave, is that we are into the 61.8. Not a problem. Actually, that's perfect. That's where smart money wants to buy. I would be more scared if it was staying right here at the 75%, or not 75%, the 33%, and then them taking them to, I don't know. But looks like it could be pushing down a little bit harder. If anything, we do have a bullish fair value gap, not fair value gap, but bullish order block. And yeah, that's pretty much it. I think we pretty much got through everything that I know that I wanted to get through. Let me see if there's anything else that we could get, try to reach into really quick. I know it's been an hour. I can cut this up into 2 segments. No big deal. Trying to think what would be appropriate. Technically I'm shorting Bitcoin right now, and I'm shorting Bitcoin both USDT and on BTC. So hey, sushi's already here. Why not? Let's just go ahead and take a look at sushi. All right. Sushi's been kind of odd lately. And I am on a 4-hour chart of sushi. All right, what I do see is I do see equal highs right at the same point to where there is a fair value gap. I don't know if you guys see it. All right. I was about to fall asleep there. All right. I definitely think this is it for me. I'm trying to think if there's anything else that I could possibly go over, and I don't think there is. We went over enough crypto that I think everybody's pretty much got the hang of what's going on. Last week made equal highs, broke the equal highs. This week we're kind of flattening out in that curve. We're retracing. Once we retrace, then we're going to be pulling back out of that, and then we'll see if we're going to be shooting out of that formation, or if it's going to be a lollygag type time. But we'll see. I mean, I know I've been running around trying to make sure everything that I've been looking at has at least had some good insights, and I hope that you guys have been appreciating the kind of work that I've been doing. If you have, I'd like you to do this again. Please. No, I'm not begging you, but hit that like, hit that subscribe button. The smart money thing, you guys are going to get used to. You may not like it just yet. It maybe I'm not explaining it, well enough for you guys to follow along. Maybe I need to be more hip, I don't know, crazy. Maybe I need to throw glasses and stuff around and eat glass. I don't really know, but I just want to make sure that everybody is getting a decent education as far as it comes to reading charts, price action, liquidity voids, any kind of price void, imbalances, things like that, anything and everything. I want to make sure everybody is actually getting a good reading of these charts. And if you ever have any questions, whatever, if you have a chart that you want me to do, reach out to me. All my social medias are going to be on. They were on the very beginning. They're going to be on the end. It's that page of social medias. If you have a feeling to donate, you can go to the very beginning and watch. And then I'm going to start to be doing this hopefully tomorrow. I'm going to do it tomorrow. I don't care if anybody's watching or not. But it'll probably be around 3 or 4 o'clock. I'm going to be hosting a private lesson for my Patreon people, maybe locals. I think I'm going to switch to locals, and then I can give you a little bit more in-depth, detailed what is going on with these things, or what are we looking at, what are we looking for, how do we make things go smoother, things like that. So whatever you guys can do to be here for that'd be cool. If you guys have a better time in mind, I was gonna try to do it during the week, during the weeks, like Wednesday or Thursday, But this my new job has been just like a lot of manual labor I've never done before. So what I had been doing, like I said, I was gonna do Wednesday, Thursday. I'm gonna ixnay that. I'm just gonna do Sunday for members only. I want to try to do as long as a lesson as I can. Take questions from everybody. If you guys don't understand anything, and if I don't know the answer, I'll admit it. I won't know the answer, and you know what? I'll go back and I'll go through all my mentorship stuff, and I'll try to see if I can't figure it out. Okay. That's it for me. Is there anything you guys got going on? Anything? All right. Well, anyway, what I'd like you to do is that, and also, you could do this one thing. Wear your pants.